The market was off the rails this morning, and where, oh, where do you find opportunity when everything is just going sideways? We had bad economic news. The jobs report was not at all in line with what was expected, and the revision that came in for the last jobs report didn't help matters along one bit, not to mention the tariffs were rolled out today. So the market was down, way down on the open, about 500 points, and really, as of right now, is still just way down in the dumps. But we had opportunities on our opening gap trades. You've heard me talk about the opening gaps a lot. I just want to show you one here that was pretty much typical for, we had 4 or 5 that were really good this morning. This was Roku. Roku came in on earnings that actually beat the street, but guidance that was not at all what the street wanted to hear. And we had this gap move lower. Some of you ask about the 1, 2, 3 stair step, and well, you know, where is the 1, 2, 3 here? It's just a 1, 2. That's okay. We don't care that it's exactly 1, 2, 3. It could be 1, 2, 3. It could be 1, 2. It could be 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6 for that matter. As long as it happens before 10 a.m. Eastern, we're looking for that entry opportunity. And you can see it here. We had an entry on Roku that happened in the third bar of trading, and it was right above this high. So we're down 2 standard deviations in terms of volatility. We've got 2 standard deviations out in the bell-shaped curve. We've got a 95% probability of a reversion to the mean. And, you know, once that reversion happens, we're not really expecting anything else. We're just saying what happens when it gets to 1 standard deviation, then the probability of a move lowers a little bit. When we get back to the average, the probability of reversion is gone. But in this case, how did we set that target this morning? We were looking at volume by price data. We were out here on this axis, looking at this information right on the side. And when price came up through our trigger at 81.89, we had the logic in place for where we wanted to exit the position. We wanted to get out on a move that got us right back up into here, because this is what sent price spiraling lower this morning. So when price got up to this 83.71 level, this volume by price was put in. This is when we saw this happen. And that first threshold level just sent everything careening down into the bottom of the range, knocked over $2 off the value of Roku in just a matter of a few minutes, actually about $3. And when that kind of a move happens, our best expectancy of what's going to happen when price gets back up into here is that we're going to see this move lower. So we don't really care that we miss part of the extension. This is not what you should focus on. The thing to focus on is the highest probability in terms of a profitable reversion trade is going to be right to where something happened before, and that is right here. So when price gets back up into that 83.71 threshold level, we're looking to take profits, and no one ever went broke taking profits out of the market. So this reversion higher again doesn't have to be exactly a 3-bar dip. We're just looking for the deepest high in the morning gap. We're looking for a narrow range bar. You want to see that second bar not have a really, really wide range. Once we have this bar in place, our entry bar ticks up through it. We've got a nice place to put a stop loss, very tight stop on the trade in general, down around $81.40. So very minimal risk, nice big potential profit here, and everything played out. So we had lots of opening gap trades this morning. Obviously, thing to do was to filter them down, get them down to where we've got good volume on the move. We've got nice spreads that are tight, gets us in front of the opportunity, and lets us book a healthy profit while the rest of Wall Street is in a flat panic about a big move lower.